Good morning and good afternoon, everyone. On behalf of Jay DeRio, thank you for joining us today. My name is Wen from Client Success and Key Account China Desk at JDR, and I will be moderating today's webinar, Foreign Trade 2026, Key Changes for Chinese Companies. During this session, our expert will walk you through the most relevant developments in Mexico foreign trade framework, and they will also share some key important insights on how these changes may impact on your operation compliance strategies and overall risk exposure. And it's my it's my pleasure to introduce our speakers. Jorge Rodriguez, Director of Foreign Trade. Cynthia Yanez, Tax Partner and Head of China Desk. So please allow me briefly share their professional backgrounds. Jorge Rodriguez holds a degree in International Business School with more than 70 years of experience. Jorge has developed his career in international firms where he has served as a consultant, specializing in foreign trade. He has led a lot of projects involving custom audits, tariff classification, free trade agreements, and promotion programs such as EMAX, PROSEC, and Rule 8. His experience also includes customs evaluation studies and legal procedures such as home visits and desk audits, as well as advisory projects with tax transfer pricing and a lot of them. Cynthia Yanez has more than 18 years of experience advising international clients across multiple industries operating in Mexico. She has supported a lot of companies in their successful soft landing process from the very initial feasibility and structuring phase to full operation implementation. Cynthia is based in Monterrey, Mexico, and she is also the leader of JDR's China Desk, supporting Chinese companies entering and expanding successfully in the Mexico market. So with that, I would like to welcome Jorge and Cynthia. Thank you both for being here today. Now let's move on. Let's move on to our first topic. I will hand it over to Cynthia.
Thank you, Bowen. Good morning, everyone in China. Thank you. We are so happy that you are with us here on this webinar where we are trying to combine Chinese investment into Mexico. So we are glad to say that we have participants from all over the world, and we wanted to create this very interesting topic. Maybe, Bowen, we can go back to the agenda so that everyone can have an idea on the topics that we will be discussing. Of course, Mexico and tariffs has been a very hot topic for several months now. So we are going to be discussing import and export tariff reforms that we have been seeing during 2026, as well as custom law reforms. This is very important for any company that wants to import into Mexico or export out of Mexico. In addition to that, we are going to review some new obligations for every company and also for any company operating in Mexico and also for Chinese company, which is the electronic declaration of value. We will learn about that in a few moments, and some other foreign trade regulation and some trends on what the tax authority has been implementing audits in Mexico, so everyone can be aware of that, as well as to learn how best to prevent any any negative item. So this is the agenda for today. As we mentioned before, we have a question box on which you can type your questions. We will take a look at them and try to respond as many as we can. So thank you, Jorge. We can go ahead with the presentation.
Thank you. Thank you, Cynthia. Thank you, Gwen. Thank you, everyone, for joining us today. And we will start. Basically, this is the first topic, macroeconomic outlook revenue collection, which basically it's historic information regarding how the authorities have been conducting, how these audits have been increasing during the last years. So as you can see, during 2018, which is the historic information about, includes 3 million thousand pesos, in which it was the revenue for these audits that these authorities have implemented, and up to now in 2026, as you can observe, 2 million pesos were increased, and mostly about these operations were implemented specifically for customs reviews and procedures on customs matters. So basically, this is a historical review, so you have in mind and what is the tendency for the authorities in which they are addressing reviews specifically for different aspects, but basically in terms of customs, something that they may you may take some actions considering they are observing in a very deep way the processes for customs activities.
Thank you, Jorge. And if we can go back to the last slide, I would like everyone to know that this is actual historical information of what Mexican tax authorities have been collecting through the years. So we see from 2018 up to 2026, you can see how 2020, 2019, 29, up to 2022, there used to be a conservative growth like 4.6%, 6.8, 6.9. I mean, it's a big growth in tax collection, but somewhat conservative. Then you see 2023, you see a big increase. 2023, there was a 18.5 tax collection increase, which is pretty significant. And after that, almost every year, the collection is increased significantly. Why we see this change from the prior years and 2023 and forward is basically because electronic tax audit. It means that the tax authorities, they receive a lot of real-time information from taxpayer, whether it's invoicing, whether it's electronic import documents or other reports that the authority has access to. So now they receive all this real-time information and they can audit from their own computer. They have created algorithms that allows them to detect risk. So without making a huge investment, they can go and visit your company already knowing that something is incorrect. So from 2023, 2024, 2025, we have a big increase in tax collection, and we can expect that to continue to grow 2026 and forward. So this is for everyone that you have this visibility. How this tax collection increase is distributed. Here is a chart of different taxes in Mexico, such as income tax, VAT, a special tax, and foreign trade. the tax that has represented the highest increase is foreign trade. You can see how income tax rate, little increase, VAT, little increase. But if you look foreign trade, is huge increase. Why? Is because tax authorities, they are directing their audits to foreign trade because they already know is where they can have the biggest impact. And then to the right, we have accessories and others. These accessory and others are basically late fees or inflation on past due collection. So whenever tax authority is making an audit for a prior year, like 2022 or 2023, they are also collecting late fees. So that's why this is the other area that we are seeing the big increase. This is another chart. Basically, we are comparing 2025 expected tax collection growth versus 2026 expected collection growth. We can see here again in the middle of your screen, foreign trade taxes is where the authority is looking for to increase tax collection. So that's why Jorge, he will be telling us what to look for and also some preventive measures. Whenever there is a new regulation or there is a new infraction, is an area of opportunity for companies to work on it internally, to create a risk mitigation process internally and avoid having this impact whenever they receive an audit. So we already know this is what the authority is planning to do during 2026. So this is an opportunity for everyone to be prepared.
Well, as you may know, our primary objective today is just providing some background and some suggestions that we're observing on a daily basis. So, considering the affections you may have in your current operations, and one of the most relevant situations we're reviewing with the imports from different countries in which we have a free trade agreement are those like China, Asian countries, not only China, Singapore, Taiwan, and Indian also. And basically, as you may know, we have a modification on the tariff scale in which basically the Congress require an adjustment on the tariffs, increasing from that 25% up to 50%. And basically, those adjustments were focused on automotive spare part industry. At the end of the day, the benefit was the automotive industry was not affected, but some other sectors they were affected. You know, like textile and fabrics, like some spare parts, and basically these amendments specifically were applied to plastics, steel, aluminum, toys, and for those regarding the spare parts, basically on bumpers, on brakes, axles, and radiators, which basically belong into the spare part industry, the automotive industry. And basically the ranging from the new tariffs passed from 25% to a 35%. Something that you need to take in mind, something that you, before conduct any import, is a suggestion you conduct a review for those HTS codes apply for your products. In case you are already importing, review what are the requirements you are subject to. So it's something that you need to take in mind. But basically, it's this decree was modifying during the last year, and finally published on December 2025, entering into force in January of this year. Basically, what the support and the reason why they impose these new tariffs is basically considering the trading balance with some countries in Asia. I'm including the most relevant for Mexico. According to the government, the imports versus the exports. I mean, we have an imbalance in 10 times from what we really export to those countries. And basically, the government is trying to correct the balance. As you may know, is also affecting the procedures that we're taking in place for the next months, especially for the free trade agreement with the US. Considering that we Mexican companies import raw materials and components needed for these manufacturing activities and subsequently export it to the US. Well, something that you need to take, we consider relevant for your operations, some those may risk that may arise in your daily routine. Basically, in terms of the federal tax code, they were amended or where it was updated, in which they include additional requirements, penalties for the following operations. Now, in case you imported under authorized programa for deferral of duties, such as IMEX, such as Recinto Fiscalizado Estratégico, well, the authorities now are including as a crime of smuggling when those goods imported under these deferral programs, when you are simulating transfers or temporary imports. It's not that usually the case for the companies. It happens no matter the origin for the country, no matter the country of the company, but it's something that they observe. They are not in compliance of these processes for legal imports. So currently the tax authorities determined that the crime of smuggling will be included for these activities. No, if you consider fictitious operations and you are not, and those goods never arrival for these warehouses or these special deferred programs. The penalties basically pass from 10 to 8 years imprisoned, especially for the legal representative. Something that you may take in consideration is it's a very high risk, so it's something that the companies need to address. And also the Article 105, which is the equivalent activity of smuggling, and in which the authorities determine that the same penalties will apply. When the companies do not comply by having the documentation to support the legal import of the goods, or in case those importers who fail to lead certified origin to obtain preferential duty rates, especially for the USMCA. Something you need to take consideration in the new reforms for the Article 42 for the Federal Tax Code, which is basically the powers of verification of the tax authorities, basically audits, in which basically this article includes a new reform in which the authorities now are allowed to include technological tools to perform these activities. And these technological tools are audios, are records, and everything needed that the authority needed to perform is activity of the auditing, which for us is basically a very high risk, because everything you said will be recorded and it could be used against the company. Something you need to take in mind. The best suggestion here is, in case you are on these faculties, the best way is to address this through a third party, an advisor that can provide the support to you, so we can take the process in this case, our hands, so we can guide to you and how to take these new faculties, these audits before the authorities.
Jorge, if I may add some comments on the previous slide, this means that whenever the tax authority is making an audit, they will visit you at the facility at the warehouse, at the manufacturing plant, they will visit you. And it's very important that the appropriate person attends the audit from day one. What happens? Maybe the receptionist is attending the auditors, okay? And then the receptionist, of course, is not aware of all foreign trade regulations and also is not aware of company's operation. This authorization for the authority to take photos and take videos and audios of the audit process is very risky because if the inappropriate person is giving answers to the authority, then it can be used as evidence against you. So, as Jorge mentioned, whenever you have an audit, reach out to the specialist on how to deal with the audit from day one in order to avoid worse consequences.
Totally agree. Thank you. Thanks, Cynthia, for the declaration for this topic. And in the same article, also mentioned that you're not the only, as a taxpayer, to be subject to the audit. Also, you're liable parties or third parties related to the goods or merchandise to be imported or exported. In this case, maybe your customs brokers. In case of virtual operations, even your suppliers and also your clients. And in this case, the authorities we may require information to them and no extend the audit to them. And in this case, was basically what they are including is this part, and also providing that during this analysis, they can request the issuance for your digital tax receipts, the CFDIs. And also, in all the times, they can request that the company proves the legal tenancy, acquisition, or import of those goods that came from any other country abroad. And basically, you need to provide the support of this legal importation through two ways, through the pedimento or through the CFDI. So basically, this is something you may take in consideration when you are under audits by the tax and customs authorities. Well, basically, were the reforms for the federal tax code. For those regarding for the customs law reform, which basically was entered into force in January of this year. Basically, they include. We summarize the information of these updates, in which 65 articles were reformed, 44 were additioned, and there were some 9 derogations. Basically, the most relevant situations here were the creation of the Customs Council, which we will mention in the following slides. But basically, is the entity who will manage, control the customs broker's activity, even the validation for the license, cancellation of the same license, and also the current powers for the SAT and ANAM. ANAM basically is the customs authorities. After the customs clearance was conducted, the participation of the Transformation and Digital Agency, which basically is the entity that will provide the facilities to the SAT and ANAM to review those information regarding these electronic tools that we mentioned before, those videos, audios, and everything needed to conduct the new audits. Joint and several liability for the customs agents, new regulations for them. Basically, these new regulations will transfer to the taxpayers, which basically, as general comment, these customs agents become a filter for the tax authorities, and they also will provide assistance to the taxpayers, but also in case the SAT or the customs authorities require information from a specific taxpayer, they are obliged to provide that information to such authorities. The customs license is not longer for a lifetime. Now, currently, the customs license will be valid for only 20 years, which could be extended for the same 20 years. And The customs workers, we will submit it to a certification for every 3 years. And bueno, new penalties updated and on penalties and infractions. And also the new customs law includes the strengthening controls on customs facilitation programs or deferral programs such as IMEX, Recinto Fiscalizado Estratégico, Almacén General de Depósito y lugar distinto al autorizado. Basically, the most relevant for taxpayers updates are based on this, which we will mention in the following slides. Basically, as we mentioned before, the SAT and Customs, which is the ANAM authority, they are jointly working jointly along with the Ministry of Digital Transformation and Telecommunications Agency, as I mentioned before. In together, we will be providing and reviewing and enter into force agreements to review those information and technology coordinated that will be provided for the taxpayers, in order, at the end of the day, what they are trying to do with all of this is to be more efficient on their audits that will conducted in the following years and including this year. And basically, what are these technological systems that we will observe in the following months? Basically, on recintos fiscales are recintos fiscalizados estratégicos, basically those facilities in which you can enter your goods sometimes before to conduct the customs clearance. These suppliers for these benefits to administer your inventory, currently they need to provide on a real-time information and access, and provide access to the authorities, so that the authorities can review what is the process for the inventory control system that this kind of suppliers are providing, and in order to determine that you don't have that this kind of receipts are not have the proper controls, and they are not before to conduct the customs clearance, they are conducting the paying of the duties, which basically this is the main requirement. Specific controls to determine that the goods will be paid the taxes at all the times, no matter the taxpayer, no matter the origin. Everybody has to pay at some point at the time for withdrawal those goods for those facilities. Well, as I mentioned before, they established that the customs authorities may rely on systems, technological equipment, video recording equipment, or any other means of the service that is available to evaluate that this kind of facilities have the proper inventory control systems, and everybody at the end of the day will be paid taxes. Regarding customs broker, as I mentioned before, now currently the customs license authorization for the customs agency will be valid for 20 years. That can be extended for another 20 years, as long as they comply with the requirements in terms of the foreign trade general rules. And these customs agents must be certified every 3 years, and in order to maintain the license. The creation of the Customs Council will be this Customs Council. I will mention before who will be the parties integrating this Customs Council. But basically, this Customs Council is the entity in charge to grant, suspend, or cancel the customs license. Basically, the customs worker will report to this council. And basically the customs worker now are obliged to be in compliance, not only for record keeping and controls with their clients, but also by themselves, in terms that they need to be in compliance also with the tax compliance. And also they will be subject that they need to review every taxpayer that they be hired. you need this customs broker need to require information for the taxpayers in order to review and validate that this taxpayer is on compliance on its tax and customs requirements. That's I mentioned before. At some point, the customs broker it's our supplier for customs processes, but also it's a filter for the tax authorities. In some cases, when the authorities require certain information, they can request information directly to the taxpayer, but also to the customs broker, because now the customs broker requires to review specific documentation before hired or to be authorized to conduct the customs clearance. Okay, but also the Minister of Finance, public and credited, has the power to issue customs broker license exclusively to manage the clearance of those goods whose HTS codes have been expressly authorized. Okay, what are the obligations for the customs brokers? Currently, with this new reform, the requirements to obtain in this license this customs broker or the people involved as part of the customs agency must not to be a public servant and not be disqualified from doing so. So in that case, they must not be related by blood to the administration or deputies administrators of the customs office or any other department related to the customs or tax authorities. So how they're trying to separate and have these activities separately before not having this conflict of interest. They also will be submitted to psychotechnical examination, not only customs agents, also some most relevant representatives. They also must to provide and submit annual information regarding their financial situation, and they must not be partner, shareholder, or legal representative, or have an employment relationship or connection with the person who they process foreign trade operations. Now, and again, we need to separate activities from clients, but also with the council or any other authority. The customs law removes exclusions from liability for customs agents relating to the payment of tax differences, compensatory fines or charges, regulations, and non-tariff regulations and restrictions, which basically now your customs agent is responsible for this. So it's very important that you have controls in your contracts with the customs brokers. You can review with them and determine what will be the responsibilities and obligations for each party. And currently, most of our clients are celebrating new contracts in which they are determining what will be the next activities for the customs brokers. But also considering there are more that the customs brokers will be the responsibility is more currently than it used to be. What is happening now is also the customs broker are facing an incremental of fees that are being extended to the taxpayers. It's basically new charges from the customs brokers. Something that something you need to take in mind is regarding the official Mexican standards. Basically, this information is basically for those goods, and you need to include your labeling information for the goods. It used to be an activity they perform and through the special agencies for compliance for these official Mexican standards. The most relevant information on this procedure and the new tax reform is that it used to be a penalty in case you do not comply with the requirements of the NOM. Currently, in case you are not in compliance, the authority has the powers to seizure the goods and also impose a penalty from 200 up to 300% over the value of those goods, which is something pretty relevant considering many companies are not aware about the total compliance for the NOMs.
In
Yeah.
this case, NOM application now is very relevant. how can Chinese companies identify when a NOM is applicable?
Thank you. Excellent question, Cynthia. In this case, we need to review what is your HTS code and have the proper analysis for the HTS code. In case your customs broker didn't provide, we suggest to approach to the firm in this case. So everyone specialized on tariff classification. So we can have, from one hand, having the correct and proper tariff classification. Once we determine that tariff classification, we can review what are your obligations in terms for non-tariff regulations, which basically are NOMs, other permits, before any ministry, ministry from economy, ministry from health, and any depending of the product, depending on the tariff classification, we can determine what are your obligations regarding this HTS code.
Okay, so a case-by-case analysis,
Right.
depending on the HTS codes of the products to be imported. That's how they can identify.
Correct.
Okay, thank you. Very useful.
In case for international treaties, the customs law includes an obligation to submit the document certifying that the goods were under the supervision of the customs authorities of a country that is not party to the respective treaty. Well, basically, this new addition is basically included on the free trade agreements. Now it's included on the customs law, considering that we can have derive of these logistics movements when the goods during the route for the goods from, let's say, from Asia, they pass to Europe and then pass to US and then to Mexico, which is the part of the routes now, and any other country different for the free trade agreement is needed that you prove that the good maintains and keeps the origin in terms of the free trade agreement. Let's say if we have product coming from Europe, and we have a free trade agreement with Europe, but the route or the logistic route, the shipment goes on a first stop in, I want to say in the Caribbean, maybe in the Panama for some reason, and then these goods moved next to Mexico. I mean, there were a transshipment movement, and we need to demonstrate during these transshipment movements, derive of these logistics procedures, the goods never enter into this country. No, at the end, the goods keep and will maintain all the times by the guard of the customs authorities. Basically, this is the summary for this part. And in order to keep and maintain the country of origin, but basically it applies only in countries in which we have free trade agreements. Something interesting in case for authorized economic operators, in case you have this ultimate certification, in case you will be suspended, you cannot access to this benefit in a period of time of 5 years. But in case, as derive of the analysis for the tax and customs authorities, the cancellation derives for crimes related for tax crimes regarding to entry or exit of goods, and you avoid the payment of duties. The authorities are determined that you will no longer have the benefit to obtain the benefit for this new certification. So in this case, will be canceled permanently. Regarding for CFDIs and transfer goods and consolidated pedimentos, well, basically, the tax reform includes, in order to prove and protect the legal stay and transport of the foreign goods, as you may know, part of the new the regulations for the customs procedures is to expedite the CFDI or Carta Porte, which is provided by the transportation hired by the company. So in this case, the authorities have observed that not many companies or transportation companies have this document to prove the legal transportation of the goods from, let's say, from the customs warehouse to the final destination in Mexico City. No? So basically, it's obliged that now, as you, as a taxpayer, as importer or exporter, you will be permanently reviewing that um, your courier or your transportation company has at all the times supporting the digital tax receipt for this, or cartaporte, to supporting that these goods are transported for this specific transport, for this specific route, and basically having this supporting documentation also along with the pedimento, if applicable, or the CFDI for the value of the goods. And another benefit now, something that for the consolidated pedimento, if you have a company that conducts consolidated pedimentos, as you may know, this the weekly pedimento closes every Tuesday. Now the authorities changed the day. Now these consolidated pedimentos on a weekly basis will be closed on Fridays instead of Tuesday. The electronic file and customs guarantee account, which basically this customs guarantee account, it's applicable for those goods that the authority consider are importing as undervalued price. So basically now the authorities are indicating that this customs guarantee account also needs to be and contains and support with information and documentation regarding these goods, in order that you can demonstrate as a taxpayer, as importer, that you are not undervalued such goods. So in this case, that they are requesting now is transportation costs, documents that support the transportation of the goods, CFDI, cartaporte, as we mentioned before, electronic payment or transfers, or any document that demonstrates that the operation has fully integrated in terms of record keeping, and also to demonstrate this traceability, and also have the record keeping to supporting that effectively this operation was really conducted. The other change now is, in case you are applying this customs guarantee account, you have the benefit that closing this customs guarantee account in a period of 6 months, now it changed and shift up to 12 months. For those who doesn't know what is a customs guarantee account, when you are importing a good which could be considered as undervalued, the authorities allow to you to conduct the import as long as you guarantee the payment of the duties associated to these goods. The pro is you can conduct the customs clearance, but the cons are you are paying the taxes, with most of the case you are not fully applicable, and this recovery you obtain it in a 6-month period. Bueno, it used to be a 6-month period. Now it changes to 12 months. So your money is back in a 12-month period. Well, regarding to amendment pedimentos, which basically all the companies are affecting, everybody at some point have to amend pedimentos because inaccurate data. And those regarding to review at origin, and for those regarding damage or destroyed goods. Basically what was amended is now the previous law indicates that you can conduct any amendment before you conduct the customs clearance procedure. Now they eliminate that part, and they're not specifying if you are being submitted to a fine. But the benefit is you can, before activating the automated selection mechanism, basically is the green or red light in the customs warehouse. You are allowed to continue importing or amending those pedimento before conducting or before enter those goods to the this selection mechanism. Regarding those review at the origin procedure, the law clarifies that not only takes into account pedimentos that were not subject to the customs inspection and verification of goods in transit, but also any other type of review carried out by the authority in accordance with the Federal Tax Code and customs law itself. Some cases that are applicable for review at origin procedure are not applicable for everyone because of the requirements are pretty high, and also the values required to obtain this benefit. But they include this new process of review on origin procedure, and basically the benefit for this review at origin procedure is that the reviews in the automated selection mechanism are not several. I mean, basically, is free access to the Mexican market because you are certified towards this origin procedure. It's also a benefit, but also you need to conduct a specific procedures at the end of the year in which you need to determine if the correct information that was imported was correctly declared at the customs authorities. In case to observe variations, you have the possibility to amend the pedimento to include the correct values and declare the correct contributions in case of omission of payment of duties. Regarding temporary import of goods, with regard to the temporary importation regime for goods to be returned abroad after undergoing manufacturing, processing, or repair process, under the terms of the authorized programs, it established that when the cancellation of said program is notified, the goods must be transferred to the definitive importation regime or return, so that they are not considered to be in a country illegally. Basically, the authorities are providing you 60-day time period to return those goods or to shift the regime to temporary to permanent basis in order to you pay the contributions that were submitted for deferral of duties.
Jorge, in this case,
yes.
we are talking about cancellation of a program that
Right.
allows temporary import. What can be an example of those programs that if it is canceled, company will have 60 days to
Like
correct?
IMEX companies,
IMEX, okay,
recinto fiscalizado estratégico,
okay,
and bonded warehouse for automotive industry.
okay. Those are the types of special programs
Right.
that if they are canceled, companies have 60 days to pay those duties or to return abroad, right?
Right.
Okay, so this is very important. Thank you.
Very important. And the following is also very important. When you are not being canceled, and it's pretty common that IMEX companies transfer through the virtual schemes, which is a benefit for IMEX companies. But currently, the new reform includes that the ones with those companies in which you are having the benefit for these virtual schemes, currently they need to have information and provide information regarding those goods and have a statement in which those goods that were received for other IMEX company, we need to certify that a production process was conducted before this transfer of goods. And at the end, what the authorities need to review is that during this benefit for the virtual schemes, these companies are providing manufacturing activity or export services for these specific goods. And you are not only transferred without having a specific procedure in which you initially was authorized for transformation, manufacturing, assemble activity, or export service. No, at the end, the authorities need to have the proof that those goods temporarily imported were submitted do this specific activity that you were authorized. Well, basically, these are the most important amendments in the customs law. The following slides include the specific changes for the tax reform, so you have how you take in mind. No, we mentioned before in the Article 36A is regarding the import record keeping, or the documents that need to be added to the pedimento. So basically, those information regarding to the column on your right includes what was the reform. No? And the 36A include now that in terms of the international treaties, you need to support that in case of transshipment operations, okay, you need to provide and demonstrate that those goods were under transshipment activity in order to not lose the benefit for the free trade agreement when these goods came from a country in which we have a free trade agreement. And the same 36A includes another reform for those cases. It's just very, very specific for those companies to import goods and that require to be supported for a certificate for waste. In the previous law, you require to be hired a third party that review and qualifies that the value you are declaring is correctly supported by the weighting mechanisms. But now you can do it by yourself. Is that applicable for your company? And basically, this is the main benefit. The next one, the Article 47, is more regarding the procedure for submitting inquiries regarding the tariff classification and ICO. Basically, it applies for everyone, no matter if you are IMEX, not IMEX company. Basically, the article includes as importer or exporter, in case you didn't know what is your tariff classification, and you consider can be classified on one or more tariff HTS codes, you can submit a ruling before the authorities to determine what is the best alternative. In the previous customs law, you need to provide to authorities, okay, these are the HTS codes that we consider as a taxpayer, in which we consider we can apply the specific HTS code. We have doubts. Your authority, you need to tell me, considering these options, what is the best alternative. Now with the tax reform, you don't even know what is your HTS code, and they can provide you a solution regarding what is the applicable HTS code for your specific good. Something very beneficial, because in the previous one, and if you are providing an incorrect data, and the authorities, they only provide, we believe that considering that you provide the most relevant information, the most accurate HTS code is this one. That disappears, and now they can provide you a solution in this matter. The compliance for this benefit is the Article 49 bis, which basically says, okay, in case you didn't know, you can apply rulings and criteria, and you can submit this process before the Tax Administration Service. And so you can determine what are your requirements and conditions considering your applicable HTS code. The Article 52 is obligated to pay taxes on foreign trade and countervailing duties. But basically are those persons who introduce goods into the national territory are subject to pay foreign trade taxes and comply with non-tariff regulations and restrictions and any other free trade regulatory measures, including those operating on the duty drawbacks or duty deferral programs, such as mentioned before, IMEX, Depósito Fiscal or Recinto Fiscalizado Estratégico authorizations. Basically, they need to prove they need to pay the foreign trade taxes in the way to the importation into these deferral programs. At the end, the benefit for this is for the authorities, in which they need to have clarifications about the duties that need to be paid, and in case you as a taxpayer that are using the benefit for a recinto fiscalizado estratégico, which basically is a deferral program of duties, they are requesting that you as a taxpayer are obliged to the payment of the duties. So at some point, somebody has to pay the contributions. Maybe you can manifest that those goods were lost in the process, in the warehousing, or during transit when you are about to submit the goods for these benefits. But at the end, the authority said no matter who will be introduce these goods to these deferral programs, somebody has to pay me the taxes for these goods. Another one most relevant information regarding the tax reform is the responsibility for the customs brokers. As we mentioned before, they're now obliged to determine the correct determination of payment of duties, the correct HTS code, the correct tariff classification. They need to provide the correct non-tariff regulations and restrictions. Basically, they are responsible for these activities. And as a consequence, what we're observing is some customs broker, considering they are providing these additional activities. Some of them they already provide, but some of them didn't. But what we're observing, as we mentioned before, there is an incremental of their fees for this customs clearance and supporting supporting activities for these import and export activities. Other one that is pretty relevant, no matter if you are IMEX or not IMEX. And the authorities make emphasis that the companies need to maintain inventory control systems at all the times. And no matter if you are IMEX and using an Annex 24 system. So you're obliged all the time, permanently provide the control for the inventory control system. Basically, the same Article 59 includes what are the minimum information that need to be included in the record keeping. Basically, we are listing for you. In the subsequent calls with you, we can provide this review for each document. We're including this just for your information. Obligations to introduce extract goods for national territory. And basically, this is a procedure, a simplified procedure for courier parcel companies, not applicable unless you be UPS or DHL or any other courier company. But those to introduce extract goods from national territory through these benefits, they need to provide specific requirements for customs clearance. Well, we mentioned this before. This is the 86A, is the supporting document to Cuenta Banera en Garantía, which basically provides the benefit, this customs guarantee account, which basically provides and support that your goods are not undervalued. No, they change, as I mentioned before, changes from 6 to 12 months to cancel this customs guarantee account. Deposits through customs guarantee accounts in case you apply for this introduction of foreign goods to this intended to recinto fiscalizado estratégico or storage, custody, exhibition, sell distribution. You need to determine the payment of the duties. And no matter if you are not paying, you need to provide and determine the payment of those contributions in order to determine a responsible party for this. Article 89, just in case you require an authorization for the customs authority. Basically, it includes states or reinforce the data to some cases required to be reviewed by the authorities before you conduct any amendment of the payment. Article 112, those regarding to transfer between manufacturing and IMEX company. You need to provide information regarding what is the information submitted, what is the documentation and record keeping you have before conducting any transfer operation through virtual operations. At the end, this is something that needs to maintain record keeping and supporting documentation that those goods were submitted class-specific activity under the IMEX requirements. We mentioned this one in the previous articles and at the beginning of the call. And Article 146 is the article regarding that we, as a taxpayer, need to demonstrate that we have supporting documentation for customs imports through a pedimento or through a CFDI. Well, I mean, those documents to support that they were correctly imported. Grounds precautionary seizure, well, in case of temporarily imported goods that are not registered, they will be submitted to a precautionary seizure. Customs Council, we basically mentioned before, is something you need to take in mind is it will be integrated by the Tax Administration Service, National Customs Agency, and the Anti-Corruption and Good Government Ministry. I want to jump to the fines. Basically, this is the most relevant fines you need to take in mind. We mentioned in the previous, initially in the call. Now, as you can observe, the comparison is basically the fees jump to 70 to 100%, up to 250 and 300% in most of the following cases. And the most relevant, as I mentioned before, the number 6 is regarding to the norms that we discussed in the previous slides. More about violations. Something that you need to take in mind regarding customs valuation declaration, something that will be entering into force in June 1st. And the authorities are providing the benefit that the companies be on compliance on this, be updated on this matter, something that they need to prepare. As you may know, we need to support and provide the traceability for the transactions, supporting by the contracts, supporting by purchase orders, supporting by payments, supporting by those companies involved during the transportation of the goods, including contracts also and payment for these services to these third parties. No sanctions will be imposed up to now, but now they determine a penalty for 900,000 pesos in case you didn't comply in terms of customs valuation methodology. And basically, purchase order versus international contracts, currently both are correctly. But something that we need to review is that you have enough elements to supporting that the operation have this materiality and improvement in terms for the manifestación de valor. Basically, this is the elements: consent, purpose, think, the existence, capacity, absence of defects, error, frauds, violence, injury, what happened in case of these situations arise. How we prove the materiality is the Article 81, which basically are these all supporting documentations, contracts, addresses, register account statements reflecting the transactions, documents that prove and cover operations, and all of this listed. In terms of general foreign trade rules, documents that prove the foreign trade operation were listed for you, just to keep in mind. No, we need to strengthen contractual and fiscal operations, documents, infrastructure, personnel, correct technical identification of the goods, inventory control systems. And this is basically what they're including in the rule. We just sum up in the previous slide. Just before to conclude, these transitory articles regarding the VAT certification, something that you take in mind is before you submit to renewal for your VAT certification, it's mandatory that you comply with any requirements. It's common that you only click renewal without conducting a review or a detailed review that you are in compliance of your requirements. So it's strongly advised that you conduct this review approach with us if needed, so we can determine what is your level of compliance for your VAT certification. Currently, authorities, as you observe, are reviewing, and VAT certification are the most top of the companies to be subject to review. And just as a conclusions, go ahead, Cynthia. You are mentioning something. You're on mute.
So in this point for VAT certification, every company, they need to renew on an annual basis, and it could be the case on which they try to review automatically. Here, the suggestion is to really review the guidelines for VAT certification at the moment of renewal. Why? Because if you fail to comply with one of the requirements, you can receive a cancellation of VAT certification, and the company will need to pay a significant amount of VAT if this happens. So basically, it's sort of validating that you are in compliance of VAT guidelines at all times, and especially at the moment of the renewal of VAT certification.
Thank you, Cynthia. And basically, conclusions and recommendations, we just sum up in these four stages. In all the cases, materiality is the new word for the authority, and it's something that is pretty common now in the tax legal framework and tax compliance. Now it starts passing to the customs as well, and something to take in mind. For every transaction, you need to demonstrate this materiality through contracts, as we mentioned before, proof of payments, contracts with third parties involved in your transactions, and evaluate if there is a specific risk in your customs operations. In this case, we're suggesting conducting this reviewing or assessment to determine the level of compliance for your company, or in case maybe you can obtain an additional benefit thereof of a specific transaction with specific countries. Or maybe you are a company from import and manufacturing activities in Mexico, also export to the US, and you import from countries in which we don't have free trade agreement. There also be we can extend the benefit to these countries as long as we be on compliance with the specific rules of origin and specific rules for the foreign trade agreements. As we mentioned before, preventive checkups, or if you are about to import into Mexico, determine a specifics of landing activities, so we can provide support in not only in customs but also in tax, accounting, transfer pricing, or other activities in which we can provide this supporting analysis, and we can determine the avoidance of payment of additional costs that can be deferral or can be exempt or can be deferral at some point, at least some months, and avoid the payment immediately for those costs and contributions. And rating or in classification, basically authorities are focusing in country of origin or analysis of rules of origin, tariff classifications, and customs valuation methodology. Basically, I sum up in these three, but at the end, these three involves other branches that need to be addressed by the company at some point, and not only for customs, because at the end, customs have effects on tax, and tax have effects on customs. And as you may know, it's something that you need to take in consideration and evaluate what is your level of compliance on these matters. I don't know, Cynthia, you want to add something else, or we can jump to the main questions that we received.
Thank you, Jorge. And I think we covered a lot of topics today. It was a quick time, but a lot of topics. Basically, our recommendation for Chinese companies and for any other company that's doing business in Mexico is to get yourself a consultant party that's constantly updated on foreign trade regulations, because these can change sometimes monthly, sometimes weekly, sometimes even daily. So having the backup of someone that's having your back on it, and I think preventive checkups or health check methodology for companies' compliance, that is key in order to prevent significant impact. We already know tax authorities are going to be reviewing foreign trade operations, not only for the Chinese, but for any other company. So we already know that. Better to be preventive about it and have some internal checks for this. Thank you very much, everyone, for joining today. I believe we have a couple of questions. Bowen, if you can look at the questions that we received, and we can answer a few of those.
Yes, thank you. Thank you, Jorge, and thank you, Cynthia. I think there were a lot of information, a lot of materiality, a lot of transparency, and a lot of change and a lot of challenge. Here I have some questions. I think this question is very interesting. So the question is, what is the current government's position regarding Chinese investment in Mexico?
I can make a quick answer, and then Jorge, feel free to complement. Um, so in this case, Mexico as a country is always open to receive new investment, and we know Chinese is very strong. Uh, Companies and companies that have invested a lot of research and development. So Mexico is definitely interested in receiving this new investment. However, we notice that Mexico is um, trying to have more control on how operations are being made. With that being said, welcome Chinese and welcome any other countries, but Mexico is going to implement some controls, such as this type of audits. I will summarize as that. Jorge, would you complement?
Yeah, thank you, Cynthia. Yes, as you mentioned, yeah, the Mexico is open to any investment, and no matter the country of origin. And basically, what we are doing is reviewing that those companies came from those companies, no matter if we have it free trade agreement or we have not. But take into consideration the obligations that we are obliged to. So in this case, the most situation that they are observing is the undervalued of goods, and the observing that they are not taking into consideration the regulations for trade agreements for those companies that invest in order to conduct manufacturing activities into Mexico, then subsequently exported to the US. And they're observing that many companies are not on compliance on this matter. So the reason is, okay, let's review those companies, evaluate if they are in compliance, and determine if they are allowed to obtain the benefits that were granted. And still, the benefits for IMX and PROSEC or Rule 8 are benefits for no matter the company, no matter the country of origin, and they are open to any company who is intended to invest into Mexico.
Thank you. So, may I understand that it's not about Chinese companies, it's about compliance and control. Thank you. We are receiving another question that is, what are the most important obligations what Chinese companies will need to comply with under the new foreign trade regulations?
The new obligations for these companies is basically, as advisors, we strongly advise that you, before conducting any operation, to go to the lines to the advisor, in which we can determine what are your obligations, not only for customs, but also for tax, transfer pricing, accounting. Every comprehensive analysis needs to be reviewed. So before conduct this investment, we could be correctly advised, and in somehow you can access to the benefits that the same government is providing to those companies that have intentions to invest into Mexico, especially those for manufacturing activities. But even though when you are not a manufacturing company, those that are trading companies also can be obtained certain benefits. But basically, I sum up in which we can determine a review, a comprehensive review, so we can evaluate what are your obligations for you a specific structure, structural operation, because every company has different movements, operations, and activities. And basically, what we suggest is have this comprehensive analysis so we can determine what is the best alternative and regulations and obligations for the company.
Thank you. I don't know, Cynthia, if you want to add some comments.
I think it's fine. It's a case by case analysis according to each company's operation.
We know that maybe we cannot give you all the answer about your special case, but if you want, you can see the email of Jorge, Cindy, and myself. If you have any questions, please feel free to send us an email. And I have another question, is that what are the main implications from 2026 update to the customs law?
Main implications. Okay, the main, as you may know, manifestación de valor, which basically is the next requirement and something that they need to be addressed. Review this materiality activity, as we mentioned before, contracts, review the operation in specifics. We need to review the customs valuation methodology. So in case you are having a lot of benefits, you are not in the case in which you are be considered as importer of goods undervalued. So basically something that we need to avoid, and considering the benefits that they, in case for China, has in terms of comparison of costs, we can determine that we don't have the case and evaluate. We don't have these regulations and restrictions in terms of the value. And also HTS code, we need to review in a very detailed way the tariff classification processes, so we can determine properly what are the main contributions from one side, and the other one, the main non-tariff restrictions and regulations and permits. And finally, to determine what is the best case scenario for once we reviewed your specific operational structure, determine what is the main benefit that the company can access in terms of benefit for deferral duties and also for avoid them, and will be the main requirements. Basically, I sum up in these three.
Yes, of course. Cynthia, in this case, do you have some comments?
Jorge mentioned new obligations, and this is very important, but there are also many already existing obligations that we didn't mention here, such as compliance for IMEX, compliance for VAT certification. So constant attention to foreign trade regulations. Definitely many companies need to have some specialist in-house, and also the health check about their situation. I think companies should always be looking into that. And I think that's it. I wanna take this opportunity to thank everyone for joining today. I know there was a lot of topics, but everyone was very important, and I hope this is useful for your company. We will be happy to talk with you in more detail about your company situation. So please feel free to contact us. Thank you, everyone.
Thank you. So thank you, Jorge. Thank you, Cynthia. And meanwhile, if you have another question, you can feel free to send an email to Jorge, to Cynthia, and to myself. Thank you. Thank you all. Thank you for your participation. Thank you for your time. Thank you, Jorge. Thank you, Cynthia. Have a good night and have a good day in China.
Thank you, everyone.
Bye.
Bye-bye.